Hey guys, Dan Frio here, the Mortgage Update. And today I want to go over your debt ratio or debt to income. The past week I've received, I don't know how many phone calls. Two of the clients, they basically said they do not qualify because they do not debt ratio. And so I wanted to explain to everyone on how to do it. So I hope you like the video. Again, if you do, please give me a thumbs up. Don't forget to do that. Also, click down below and subscribe if you would. I have over 200 videos. If you're looking for a mortgage or you're in the real estate field, I think the videos will do you a great service. I'm a mortgage broker, have been for over 30 years, so I'm just trying to get out my experience to help everybody, qualify for loans. And don't be turned down and give up, because there's a lot of things. If you would, one of the best videos I have is check out mortgage overlays, and it goes over a lot of reasons why you might be turned down at one place but get approved at another. So today I want to go over what is your debt ratio exactly, and how do you qualify for certain loans, such as what is a conventional rate or conventional mortgage. What are their guidelines? What's an FHA guideline? What's a VA guideline? So let's get to it. You're going to hear different words. We call it debt to income ratio, your DTI, your debt ratio. There's a whole variety of names, but it's all the same thing. So let's get to it. Times have changed. So what happens is, a lot of times, is I'll get a phone call and the person will say, you know what, my debt ratio is over 43%. I know I'm dead. Have no loan, can't get approved. My mom told me, my dad told me, someone at the work, my realtor. Guys, times have changed. That is the old rules. It's a different day today. So if you look back here, you used to be able to get a cup of coffee for 10 cents. Now it's $1.50, and that's a great deal at $1.40. So just wanted to throw that in there. Times have changed. So evolve with the future. So I'm going to go over two different variations of loans. I'm going to go over FHA and VA loans. Those are government guaranteed loans. And I'll also go over conventional financing. There is a difference. There's a big difference. So let's get to it. Let me ask you something. Conventional mortgage loans, what debt ratio or debt to income can you go? 43? 47? 50? Which one of these is true? Believe it or not, you can go 50% on almost every conventional loan. So most of the phone calls I get, everybody thinks they're maxed at 43. No, there's certain programs that are maxed at 43, and I won't go over those, but those are basically when you apply for a loan and you were turned down and they give you a second chance. They call that a manual underwrite. So an actual underwriter looks at your file and says, you know what, let's maybe give them the benefit of the doubt, maybe approve this loan. If you go that route, in most cases, they're only going to accept you at 43%. It beats a turn down. But in most cases, when you're applying for a mortgage, you can go up to a 50% debt ratio on conventional financing. So now let's talk about FHA and VA. What's the guidelines here? 43, 45, 47, 50. Let's break it down. FHA loans, you can go over 50%. Believe it or not, we get loans approved every day up to around 57%. Now, is that good, bad? It's not me to say. But what I'm trying to do is give you the information to say, here are the guidelines. Here's the facts behind all of this. So on FHA loans, you can get approved up to a 57% debt ratio. VA is a little different. VA will go up to a 50% debt ratio. Also, VA and FHA both will allow what we called the manual underwrite. Again, if you were turned down in the computer system when applying for a loan, if you get a second chance and the underwriter will look at it in person, that's called a manual underwrite. You basically go to an underwriter and say, let's scrap what the computer said. Would you approve this? Does this thing make sense to you, and would you approve it? If so, in most cases the max they will go is 43% debt ratio. So again, FHA, you can exceed 50. VA, you can go to 50. Okay? So now let's go over exactly what is your debt ratio. And most people, when we say, well, it's your debts divided by your income, let's define your debts. Your debts are whatever shows up on your credit report. That's why we thrive saying, let us pull your credit because we need to know what your debts are. You might say, well, when you're calculating it, you might put in there your phone bill, your electric bill, all these other things that are not a part of your debt ratio. So that can also skew the numbers. So it's basically all the debt on your credit report plus your mortgage or potential mortgage, or the mortgage you're looking to get. That is your debt. Okay, also a part of that debt is not only the mortgage part, is your taxes on that home, the insurance on that home, the PMI on that home. You might have flood insurance on that loan. You might have an association fee on that loan. All those are added into to combine all up to what your mortgage payment is. Okay, so now let's go to the income part. This gets tricky. So it is your gross income. So the income before taxes and all that stuff is taken out. So here's the tricky part. If you're full-time and you've been doing it for a year or two, even 6 months, you can get away with 6 months. Especially if you're a new graduate from college, you can basically be on your job for a month or two and qualify as long as you have a full-time job. What you do is you take your base pay. So let's look at it. If you're under 2 years, you can use your base pay only. And we would get a form from your employer giving us the average hours worked and back that up with your pay stubs. So that is your gross income. Now, if you work part-time, commissions, sales, anything other than your base pay, you have to be on that job for 2 years or more. And then you can use any of those. That's overtime, bonuses, commissions, and whatever else you might get. Part-time jobs, same thing as that extra income that you're going to earn. You need to be on that job for 2 years. So if you haven't been on the job for 2 years, you cannot include overtime, bonuses, commissions, all that stuff, and you cannot include part-time jobs. So that's your gross income. That's a good way to factor that. Okay, so now what is your debt ratio? Again, it's all your monthly bills, student loans, car payments, potential mortgages, credit cards, anything that's on your credit divided by your gross monthly income. And then remember, let's go back. Conventional financing, you can go to 50%. VA, you can go to 50%. FHA, you can go to 57%. So again, if you've been turned down because your debt ratio is over 43 or 47, call me. Because you in most cases, if that's the only thing holding you back, we can probably get you through. So what I would highly suggest, hire someone who knows the facts. I've been doing this for over 30 years. I hope you like these videos. Again, please don't forget to if you like this, give me a thumbs up. Subscribe to the channel below. Call me. You can call me at 630-338-1160. You can also, an easy way to reach me is by email. It's dan.frio, F-R-I-O, @gmail.com. Check me out on the web as well, 1160mortgage.com. You can find me at themortgageupdate.net. There's a whole slew of ways to find me. Best way I would say is just Google Dan Frio. I'll be all over the board. I've been doing this for over 30 years. I'd love to help you if I can. Hope you find this informative. God bless. Have a great day.